what this provision is doing is to exempt people, Nigerians that earn minimum wage from paying personal income tax. We are not increasing any taxes, so there are no tax increases. There are also no new incentives that are being provided in the finance bill.
Thank you for joining us on today's episode of Tax Matters. It was the legendary Afrobeat maestro Fela Anikulapo Kuti who sang about taking his listeners into the underground spiritual. Today on Tax Matters, we will be taking you into the hallowed chambers of the National Assembly. Yes, the two chambers, the red and the green chambers. And what is it all about? The much-awaited public hearing aimed at giving Nigerians a well-considered and fit-for-purpose Finance Act 2020. Of course, you know that it begins as a bill and ends up as an act. Recall that at the end of 2019, President Muhammadu Buhari, for the first time in 20 years, forwarded the Finance Act 2019 to the National Assembly as a backup to the 2020 appropriation bill, promising that it would henceforth be a yearly affair. In keeping with that promise, it has happened. The Finance Bill 2020, which will support the 2021 Appropriation Act, was forwarded to the two chambers of the Assembly a few weeks ago. And in keeping with legislative tradition, public input was sought in the form of public hearing. On Thursday, the 10th of December 2020, 4 different committees of the Senate of the Federal Republic of Nigeria, the Committee on Finance, that of Customs, Excise and Tariff, the Committee on Trade and Investment, and the Public Procurement Committee held joint public hearing on the Finance Bill 2020. The public hearing was flagged off by the Senate President, represented by the Deputy Senate President. Chief host was the chairman of the Senate Finance Committee, Senator Adeola Olamilekan.
The Finance Bill is the second one that seeks to complement the budget cycle of January to December that was re-established with the 2020 Appropriation Act. The bill generally seeks to review and possibly amend sections of existing legislation on revenue for the nation with a view of not only generating increased revenue for the government, but also providing clarity, removing ambiguity, providing succor for deserving persons and sectors, as well as bringing our laws up to speed with the international best practices.
The Deputy Senate President, Senator Ovie Omagege, predicated the Finance Bill and the public hearing on one primary objective.
This is important because 2021 should provide relief from the year 2020, where the COVID-19 pandemic disrupted plans. Those steps were taken to remedy the disruptions. Next year is the time to consolidate on the solutions we devised in managing the pandemic.
The Finance Bill 2020 makes copious provisions for the amendment of a whopping number of 12 tax legislations in all. After apprising the gathering on the extensive consultations carried out in putting together the Finance Bill, the minister proceeded to state that the Finance Bill 2020 has been designed to build on the objectives and gains of that of 2019.
The Finance Bill for 2020 seeks to make changes to custom duties and excise, improvements in fiscal and other laws to support annual budgets. This draft bill also seeks to implement fiscal policies in line with multi-year, medium-term frameworks, as well as the fiscal strategy paper, the MTEF-FSP, as well as also support other reforms that government is working on to enhance the ease of doing business.
A major provision in the Finance Bill 2020 is with regard to the relief extended to the poorest of the poor.
As we speak, the beneficiaries of the minimum wage pay taxes. This provision is doing is to exempt people, Nigerians that earn minimum wage from paying personal income tax.
Still on reliefs.
The Finance Act 2019 introduced companies' income tax exemption for small businesses However, in line with the federal government objective of incentivizing small businesses, there is a need to introduce a similar exemption of the tertiary education tax. The proposal, therefore, is for the Finance Bill 2020 to introduce an amendment to the Tertiary Education Tax Act to exempt small businesses from tertiary education tax.
On minimum tax.
The proposal we're making is to reduce the minimum tax rate from 0.5% to 0.25% of gross turnover for financial years ending January 2021 to 31st of December 2021. So that's just for 12 months. On the Stamp Duties Act, what we're seeking to introduce is to expunge stamp duties on electronic transactions and create a separate framework for taxation of electronic receipts. As part of the gradual evolution of the stamp duties framework, it is recommended that the charge levied on electronic receipts through the commercial banks is separated from the Stamp Duties Act and reintroduced as a separate electronic money transfer levy under the supervision of the Central Bank of Nigeria. It is important to note that the electronic money transfer levy is not intended to be a new levy.
On reliefs for donors to the COVID-19 fund.
The proposed amendment is intended to grant a tax relief to companies that donated to the government's COVID-19 relief fund. Such relief is expected to serve as an acknowledgement of positive taxpayer behavior and encourage such behavior in the case of future existences of such nature.
A robust interactive session followed the presentation of the minister. Firing the first salvo was the Deputy Senate President himself.
I'm impressed with the last remark you made, that whatever is not contained here for the 2020 will be taken up subsequently in 2021. I looked at the reforms that you proposed, especially with respect to unclaimed dividends. I was curious why you did not also include dormant accounts in banks.
From the Security and Exchange Commission,
the bill makes provision for creation of an Unclaimed Dividend Trust Fund as a sub-fund of Crisis Intervention Fund. And the fund is to be managed by the Debt Management Office. The Commission is aligned with the intent and the broad structure of the proposal, especially the proposal to allow for claims by beneficiaries of this unclaimed dividend beyond the present 12 years limit. However, in the wake of the stakeholders' engagement on the proposed bill, critical stakeholders in the capital market have inundated the Commission with complaints and petitions on the proposal to set up the Unclaimed Dividend Trust Fund. Where some stakeholders are averse to establishing the trust fund as a sub-fund of the Crisis Intervention Fund, others are averse to the passive appropriation of the unclaimed dividend in the capital market and have kicked against the proposal in its entirety.
From the Independent Shareholders Association of Nigeria,
we are totally against the issue that affects the dividend of a private investors. What government needs to do is very clear. Now today, for you to get a letter of administration, take years to get. And if these things are streamlined and made very easy for people to get letters of administration, the unclaimed dividend issue will be further reduced. Government should not interfere with private money.
And in reaction to the submissions of SEC and the Shareholders Association, the minister made this clarification.
The government is not appropriating that money. It is borrowing it, and it's being issued by way of instruments to the same registrars, just as registrars are now actually, that's what they do now in terms of investing the funds. It will be funds that will be available for perpetual use by government. But if any claimant comes, then their own proportion is paid back to them through the same process through which it is borrowed. We have funds sitting with the registrars and funds sitting in the banks. And people are not claiming them. It's just a way that we're finding for government to actually put these funds to use for the benefit of the greater Nigeria. And it is not serving much purpose for funds sitting idly in the bank and just perhaps earning interest and nobody is having a claim on it. This is funds that can be put to better use.
And from the CITN,
normally in SITA, companies' income taxes are payable on profits. To us, the minimum tax provision should be expunged from the principal acts, because we are of the opinion that taxing companies without profit, making losses, amount to taxing capital. Then, Section 7 of Section 25 of SITA, donations, deductibility of donations. There is need for us to understand is the donation, there is no definition as to whether donation is in cash or kind. It's all donations. Is it in cash or in kind? It's very important for us to clearly define it. Then there's a clause there, purchase price. What is purchase price? We should determine in accounting, when you say you purchase, at what level? When you bring product to your door, there are some overhead that are added as purchase price. In this law, I think we should define clearly what purchase price will entail. Otherwise, so many people will dodge so many things.
the Federal Inland Revenue Service was on hand to clarify issues.
With respect to the issue on Section 39 of SITA, talking about commencement, there is a clear difference between commencements of trade intended under Section 29 of SITA and what we have here under Section 39. This one is dealing specifically with incentive that is available to companies that are engaged in downstream gas utilization. And the only person who can certify that indeed such a company is doing that business is the DPR, and that is what is mentioned in this bill.
In attendance at the public hearing was a large delegation of representatives of accounting and tax consulting firms.
We have listened to a lot of the comments that have been made, and particularly as it relates to minimum tax, unclaimed dividend. We believe that all these are steps that will make Nigerian tax more robust, and we allow our tax to be comparable to those of other clients.
The second comment I have is with respect to withholding tax as the final tax on technical, professional, and management services, which is very fine. I think the issue of SCP is one in which last year we also commented. We thought that it would have been best if there was also very widespread consultation with the industry, but fine. My own comment in this regard is that for digital services, that the issue of withholding tax should also be extended to them as the final tax. And the reason simply is that, sir, we know that Nigeria is a prime destination for these services, but the reality is that how do we capture these services? How do we capture the payments that go out? I know that there's a lot of question as to whether you only applied whether it's for B2B or B2C. What we're saying is that let us make the withholding tax the final tax and then impose the obligation on myself and yourself who enjoy these services to deduct and remit to FIRS.
There's been quite a lot of discussion around the question of unclaimed dividends, and to indicate that in the work done by ourselves, when we looked at the approach taken by other countries in addressing this matter, we find that the government itself is typically the trustee of last resort for individuals who cannot be found or whose properties cannot be properly handed over to them. And many countries follow the approach that has been recommended in the Finance Bill of 2020 of designating an independent fund to receive the dividends that cannot be claimed. This is done in India, it's done in Australia, it's done in South Africa, it's done in very many countries. So it's not the path that is being suggested by the Finance Bill is a path that has been trod, well trod by many countries, and I think Nigeria can draw some comfort in knowing that that independence can be assured. So we'd just like to be on the record to support that effort.
The next one is to do with exemption for minimum wage earners. So again, this is a good thing that we said if you earn minimum wage, you don't need to pay personal income tax. And I've said that a lot of times that South Africa is a smaller economy. They have exemption for if you earn up to about 2 million naira equivalent in a year, you don't pay personal income tax. Yet South Africa makes more money from personal income tax than all the taxes we make in Nigeria. All the 36 states, FCT, FRS, custom, combined from personal income tax alone. So it's a good thing. However, what I want to add is that currently in the law as it is, if what you earn in a year is 30,000 naira or less, you don't need to file returns. 30,000 naira or less, when the Personal Income Tax Act was enacted, was about $30,000. So the world has moved on, inflation has come in, exchange rate has devaluated. We should not ask someone who earns 30,000 per annum, not per month, to be filing returns. So I want to propose that we amend the law to allow anyone who earns minimum wage and all the source of income they have is only from employment, not to have to file returns, because the employer would have done the returns for all the employees, so you still have the data. So the next one I have here is to do with the electronic money transfer, which is proposed to be administered by the Central Bank of Nigeria. A couple of issues with that. The first one is, in principle, this law or this proposal will replace the stamp duty that is currently paid on money transfer. So to the person paying, maybe it doesn't make a difference to them. But in terms of the ease of doing business and the ease of paying taxes, this will count against Nigeria. So I'm involved in doing the survey for the World Bank every year. So what's going to happen is, we'll say, is there stamp duties in Nigeria? You say yes. Count 1. Is there a tax on transfer of money? You say yes. It becomes 2 counts. I do not think also that in terms of the principles in the Constitution where this stamp duty is supposed to be shared to states, asking the CBN to collect it, unless it's going to be shared to the states, will be depriving the states of their rightful revenue. And that, in my view, is against the whole principle of fiscal federalism, where we are even saying let's put more powers and resources into the hands of states. And lastly, about that point is issues to do with multiplicity of audits. What is then going to happen is that the CBN that has no role in tax matters is being asked to administer tax issues. They also have to do tax audits. And this will add to the existing problems we have, where different agencies of government are doing tax audits. I do not think that this is appropriate. I think whenever there's a need to do an audit, we ask the tax auditors, which is the FRS at the federal level or State Internal Revenue Service, to do those audits. That way we can have more sanity and reduce the cost of doing business. So my last point is going to be on the company's income tax rate. We have done what is right, in my view, for small companies as well as for medium-sized companies. We have not done anything for large companies, and it is not a crime to be large. As of today, you pay 30% CIT rate in Nigeria if you're a large company. You pay 2% education tax, that's 32. On the profit that is left, you pay withholding tax of 10% when you distribute it. Effectively, the taxes you pay on the profit that goes to shareholder is about 40%. And I did my analysis all over the world, and this places Nigeria as one of the top 10 countries in the world with the highest effective income tax rate for companies. There must be reasons why even large and small countries like the US, like the UK, are reducing their tax rates. I know that Nigeria does not have money now, but I think we can signal something, and that could be to reduce the CIT rate from about 30 to even 29%. And I've done my math to say what's the impact of what I'm proposing. So FRS collects about 1.3 trillion from CIT. 1% of it is 13 billion. 13 billion is the cost. I think the benefit will far outweigh the 13 billion, because that way you start saying to people our tax rates are effective, they are efficient, and they are affordable, come and establish in Nigeria.
Senator Adeola Olamilekon, chairman of the Senate Committee on Finance, rounded off this way.
On that note, I want to thank you for your beautiful presentation and for all that has been said.
This kind of nonsense has to end today. Why would the bank be removing somebody's money every time like that?
Mr. John.
My neighbor.
Yes, sir. Why are you rushing to like this?
Can you imagine? I just sent money to my son, and I got a debit alert of 15 naira from my bank as stamp duty. I am going to seek explanation from my bank because I made a transfer, not post a letter.
Mr. John, let me explain what stamp duty is. Stamp duty is not all about postage stamp matters. The 15 naira is a stamp duty levy charged by banks on customers who make transfers of 10,000 naira and above from one bank account to another bank account.
And why should I pay stamp duty for my hard-earned money?
Mr. John, paying stamp duty levy is a civic duty for every patriotic citizen. The taxes we all pay are collected and used by the government to pay salaries and provide basic amenities for citizens. It's even easier to make stamp duty payments now. All you need to do as a taxpayer is to log on to the following: www.stampduty.gov.ng or www.firs.gov.ng and click on e-stamping. By the way, Mr. John, it pays to pay your tax, you know.
Oh, thank you very much.
Sir.
Thank you, my daughter.
You're welcome,
My
sir.
regards to your family.
All right, sir.
This broadcast is powered by FIRS, Federal Inland Revenue Service.
Still on the Finance Bill 2020, the following day, Friday, the 11th of December, the Minister of Finance, Budget and National Planning and her team headed to the House of Representatives for the public hearing in the Green Chamber. The Speaker of the House of Representatives, Honorable Febi Bajambiamila, was personally on hand to declare the public hearing open.
The finance bill which we have gathered here to consider and to contribute to will determine, amongst other things, our ability as a nation to fund the 2021 budget. We have a responsibility as legislators to meticulously review and examine every aspect of this bill to ensure that we produce a legislative document that is clear in its objective, thoughtful in the mandate it imposes, and reflective of the best aspirations of all our citizens.
The Minister of Finance once again presented the underpinnings of the Finance Bill 2020 at the public hearing. Once again, a heavy delegation of the top accounting and tax consulting firms was at the public hearing held at the House of Representatives. And as it happened the previous day at the Senate, the issue of the introduction of the electronic money transfer levy to replace stamp duty on electronic transfer attracted a robust debate. And this clarification.
The central bank is not being turned into a revenue collecting agency. The monies are collected in banks where we all make those transactions. But the banks are regulated by the central bank, and it's the central bank that will ensure that they remit those resources, as they did, I think, in the course of this year, to the Federal Inland Revenue Service. So I think we shouldn't conflate the issue of the fact that it's the central bank that makes sure that banks comply with this. FIRS is not a regulator of banks.
The question I would ask generally is that, okay, why change the name? Why change the name from stamp duty to electronic transfer? Why?
Because of the misunderstanding that the name stamp duty generated, specifically Nine Post was claiming because it is stamp, they should be the collecting agent. So we thought to put a risk to that, because this is a fee that is charged for electronic transactions, and it does not obviate the other provisions that are made on the stamp duties. So when there's a contract between parties, there's a stamp duty. When there's a sale of assets, there's stamp. So there are very clear provisions of what stamp duties are. The error that was done is the decision to classify this as stamp duty because there were funds sitting in banks due to some litigations that could not be accessed. And that position was canvassed in the 2019 Finance Bill, which was later passed into law. But we now realize that created a different set of problems, and we're trying to address these problems by this amendment.
There you are, the Finance Bill 2020. On Tuesday, the Senate passed the bill at plenary. We expect the House of Representatives to follow suit. All is in a bid to give Nigerians a January to December budget. Commendable, very commendable. We expect the two houses to harmonize their positions if there are differences, as would be done with Appropriation Bill and then enter Finance Act 2020, Appropriation Act 2021. We wish you a blessed 2021. Thank you for watching. I'm Chiamaka Ohawachi.